Hi everybody, this is Gary Dean and this is our nightly video report for Tuesday, February 14th, 2017. Happy Valentine's Day to everybody out there. Let's get started. I'm going to start off with some of my other charts because I think it's pretty important just to kind of see where we are as far as everything. So nothing is as far as looking for a top. That part hasn't changed. Has it been frustrating and has this move up over the last couple weeks kind of surprised me? Absolutely. I wasn't really anticipating this. But if we take a step back and just take a look at what we're waiting for, what I'm waiting for as far as the larger move to the downside, I still believe there's more points to the downside than the upside, and that's even going from that from the 2290 area. So we're up some 40 points, but I believe that once the top is in, we're going to see a pretty large drop, and it's going to catch a lot of people by surprise, and I'll show you why. So this is the VIX, this is the S&P. Whenever it's been in this, down this area, it has not been a good time to buy. Now, does it mean that it has to drop right away? No, but when you can see the VIX kind of just hanging out down here, the longer it hangs out, the sharper their move it is to the downside. So you can see it hung out here from really, let's just say July into September, and then we had a decent little drop there. But here you can see it was from March until really July in that range, and we kind of just chopped around and then had a massive drop. So we're in that same situation here with the VIX, where we're hanging out at really, really low levels, and there's not really a lot of concern about the markets ever going down. So let's take a look at the short-term VIX here, and this is the VXX, and you can see the S&P was up 9 out of all the days. I think it was, probably the least amount it's been up, but yet short-term volatility went down almost, I think it's down more than this right now, over 4%. So again, they're throwing out any kind of protection on the downside, and they're removing the safety nets. And every time we've seen them remove the safety nets, that's pretty much when when these larger drops take place. And I'm not trying to set the wrong expectations. I don't know when this top's coming. It should be soon. Yeah, as far as where, it really could turn anywhere, but we're probably still going to have to go through that battle to the upside type thing. So even when we make a top, we may come back up and test it. So no short-term protection. Now, if we just take a look at the put call ratio, and this is another one. This is only from yesterday. It's not even from today, which is probably lower, but you can see every time we're down in these levels, it means that there's no safety net at all, and there's no puts being bought. And typically what happens is you see that start to rise, but we do get a significant fall at some point. And these have been kind of kind drops. Some of them have been even worse than that, but we're at levels where, again, you just don't really want to be too complacent with the market because there's no protection underneath it, and when that happens, bad things happen. So let's take a look at the put call ratio, but this is on a weekly chart, and I have it dragged out all the way to 2011, and I'm showing you this because, again, this isn't even for today. This is from yesterday. But when we got down to these levels, or where we're at right now, in these, this was where we hung out, hit this area, and we just continued to move up on this. But that's also was in the thick of the QE, rally, and there was no real protection. But once once we're down here, and there's no more, right now they got to be banking on the, what the economy is going to do moving forward, and they're, I mean, they've been pricing in 4% GDP for really the last 5 years, and it hasn't come. So I believe it's just a lot of money that's coming from the sidelines, really not even from the sidelines, but that's coming from overseas and really looking at this area for a safe haven. And the thing is that when they stop and there's nobody really believes the market's going to go down, it's usually when we get the big spikes to the upside with volatility. So I believe, okay, so yeah, this is another thing I want to show you, and this is the S&P. And again, this is the weekly chart right now, because I think just taking a look at the bigger picture, it's going to make sense because even let's I'm just going to go back to when 2009 because I remember I was I was looking to buy down here and I actually bought somewhere around the 800 or something like that, and the S&P went down another 140, but I kind of was on that page that we were making a bottom. And think about if you got long at 840, it could be very similar, except not really this size move. I'm not looking for that. But if this was 140 points off, and right now we're some 14, 15, I don't even know what my math isn't going right now. 1900 points higher. So right now we're waiting for this wave 5 to end, and this is why we have one, two, and now what happens is the way that these wave structures work is you have a 1, 2, 3, 4, and once this 5 is made, this is going to be your wave 3 right here. So what that means is once this wave 3 completes, we're going to get a pullback, and often the wave 4s go back down to the where the previous wave 4s were. So we're talking all the way down to 1800 here, and it would still be a bull market because this would be your wave 4 and your wave 5 is moving up. So there's a lot of things that are in place for this wave 4 to happen, and most likely it's going to take place exactly like this wave 4, down, up, and then down again. So this is where I'm saying there's going to be a sharp move, and it's going to be a buying opportunity, and we're going to jump back up, and this is going to be a great shorting opportunity only to set up another drop, which will be a great buying opportunity. And once that completes, there's your wave 4, and now we're going to have a wave 5 up that's most likely going to take these highs out, and we'll see the S&P trading somewhere near 2500 or higher. But right now this wave 4, there's enough points to be made on the downside that it's worth kind of waiting this out right now. So this is why I'm not really it does suck when you had a nice short position at the 2290 area averaged in, and we had a decent break, and then all of a sudden out of the blue we see the S&P tag on some 40 points in a matter of days. So yeah, that sucks, but the bigger picture has not changed. So let's just take a quick look at the daily chart, because like I said, we're waiting for the wave 5 to end, and if we're just going to kind of map that out, so this is the November lows here. Here you have 1, 2, 3, 4, and now we're just kind of waiting for this wave 5 to finish. We have the bearish divergences. We know there's no protection underneath right now because everybody has, there's no puts being bought. We know the VIX is at extreme low levels right now, and we have sentiment that's been hitting major high numbers. So there's a lot of things that are in play right now that are saying don't be complacent on the bull side, because when they do pull the rug out, it usually goes real fast, and the way that I'm anticipating it, we could get some chopping around, but it's going to be one of these things where within 2 weeks we drop 200 points, and that's kind of what I'm believing is going to be playing out. So that's that's really it. I don't really have that much on the on my regular charts here. We're just in that wedge. 60-minute, we have support at the 2277 area. If they head higher, you want to keep an eye on that. Well, we're right at the one pivot, 2337. But if it goes higher than that, we're probably looking at 2340, 2345. But again, we have bearish divergences in place. 2277 is going to be a major area, and if the bears can push through it, then we're probably going to get that larger pullback. But just on the short term with the 15-minute, again, we have the bearish divergences. And I would say this 2320 is going to be the first clue that things are breaking down. So if you're going to be conservative and wait for a breakdown to get short, wait for a break at a 2320. It's pretty close to where the top is, and that would be a safer move. And if it takes this out, you can just put your stop up here. But like I said, I'm not all that concerned with this because, like I said, I believe that the larger move is going to be coming to the downside, and I would not be surprised to see it someplace down into this, in the 20 2150 area, but the first target would be 2270, and then the ultimate target will be 2168. So with that, sorry for the long report tonight. I just really wanted to get everything cleared as far as what I see going on. So have a great Valentine's Day, and I'll talk to you guys tomorrow.